The focus really is talking to investors, talking about the uranium sector, the uranium market, and all the exciting things that are happening on that front. And we think there's a big supply-demand mismatch, and we're very optimistic on where the uranium price could go to in the short to medium term.
Welcome to those tuning into the Assay TV, where we're at 121 Mining Investment Cape Town. I'm delighted to be joined by Andre Liebenberg, the Executive Director and CEO of Yellowcake. Welcome.
Thank you very much. Very nice to be here again.
So just as an introduction, can you let our viewers know a bit about Yellowcake and the business?
Yellowcake's an investment holding company that gives investors the opportunity to follow the uranium price. We only own physical uranium, have a little bit of a cash. So, in its simplest form, I guess we're like an ETF, physically backed with the uranium commodity.
Excellent. And can we go into a little bit more depth there? You've said you hold physical uranium and you pursue uranium-related commercial activities. What's the strategy there?
So the ultimate strategy is to give investors exposure to uranium, to the uranium price, but without any of the activities associated with exploration, development, mining, and processing. So we sort of provide one-to-one leverage to the uranium commodity. There are certain commercial activities that we can do to, generate a bit of cash and income. There are only 3 locations where you can store uranium in the West. There's one in Canada, one in France, and one in the US. We store most of our uranium in Canada and some of it in France. And sometimes there are price differentials between those two locations. When COVID happened, there was a $4 premium for material in Canada versus France. So what we did is we swapped material in Canada for material in France, earned $1 million, and it doesn't matter where we hold our material because we're just providing that long-term exposure. Then we unwound that swap 6 months later, so it was a nice revenue income for us. There are opportunities sometimes to do lending on the uranium side, so we look at those. We haven't done any lending yet, but it's something that we can consider.
Do you see that in the future at all? Or?
Maybe, it really depends on interest rates and again, differentials. And the issue is security. How do you hedge out, or how do you make sure you have security around the volatility in the uranium price?
Excellent. And you also benefit from a long-term framework agreement with Kazatomprom, which, as we know, is the world's largest producer of uranium. What does that mean for the company?
So the key challenge in the industry is how do you acquire uranium essentially at the spot price? When we started our journey, Kazatomprom had excess inventory. The spot market was oversupplied. So we in a sense took 8 million pounds of surplus inventory from them, put it into our stores, and that's how we preloaded the entity. But the market has become more and more thinly traded, and the price is volatile. So for us to acquire uranium in the spot market becomes harder because you can move the price on very thin volume. So what this contract allows us to do is to raise up to $100 million of equity and buy uranium from them, and it's essentially at the spot price. So the way the contract works is there are 2 reported spot prices. It's the average of those 2 weekly prices, and then we have a 14-day window to go and raise equity and buy the uranium. So, to buy $100 million of uranium essentially at the spot price in today's market is very valuable.
Very beneficial. And what is your current focus at the moment?
Our current focus is really trying to speak to investors. The equity markets have been tough, and particularly for the commodity markets, last year was a hard year. We only raise equity when we trade at or above our net asset value. And last year we were at a discount to net asset value pretty much the whole year. So we didn't have the opportunity to raise equity and buy more uranium. So the focus really is talking to investors, talking about the uranium sector, the uranium market, and all the exciting things that are happening on that front. And, we think there's a big supply-demand mismatch, and we're very optimistic on where the uranium price could go to in the short to medium term.
Excellent. And looking at the broader picture in terms of sentiments, obviously sentiments have changed a lot over the years. Do you feel there's somewhat of a nuclear renaissance happening at the moment?
I think there is a, call it a nuclear renaissance or resurgence. You go back when climate change and energy transition became a big theme 4 or 5 years ago. We saw a lot of government policy supporting that. We had countries making 2040, 2050 or 2060 commitments to carbon neutrality. Then we had the Russian invasion of Ukraine, and energy security became a big issue. Russia is a very big player in the nuclear fuel sector, in conversion and enrichment. So that spooked the market. Big focus on energy security. And then last year we saw the emergence of the AI and data centers. We saw Microsoft, Amazon, Meta, all of them looking at nuclear power as a way to power their data centers, which need absolutely reliable, secure 24/7 power. You can't do it on wind and solar, and even coal. The variability around coal is not hugely supportive of that sort of infrastructure. So that was a big positive last year. The other thing that happened last year is the US banned Russian fuel from 2028, and Putin responded with his own sort of counter ban. So there's a lot of uncertainty as to what's going to happen with Russian fuel into the US. We also saw that Kazakhstan, which is the largest producer of uranium, as you mentioned earlier, they have done a number of deals with China. And today, 50% of Kazakhstan's uranium goes to China, and quite a lot goes to Russia. So, if you're a Western utility, the sources of supply aren't as freely available as they were, maybe five or so years ago.
So as you've just mentioned AI, etc., do you think these will be the drivers for 2025 as well to leverage the market?
I think AI is going to be a key driver. The amount of energy that's required by these data centers and the amount of money that's going into data centers. Larry Ellison is the CEO of one of the big IT companies. He said the entry ticket to the data center game is $100 billion today. It's big money. The growth in data center energy demand is something like Japan consumes in electricity today. It's enormous growth. These general processing units need huge amount of stable power. So I think that's definitely going to be an exciting thing to see how it unfolds this year. We had a bit of a wobble last year with DeepSeek, but I think that's transitory. The underlying demand for data centers and AI is established.
Do you see nuclear being one of the only solutions for that level of power requirement, or do you see anything else?
I think it's a perfect solution. It may not be the only solution. I think you could look at gas as an interim solution. In the broader sort of energy transition and carbon neutrality, nuclear has a role to play. It's not the only solution. But I think for data centers, you definitely, nuclear would be perfect, and gas would also, maybe gas is the transition.
Excellent. And to round things up for our investors, what can they be looking out for from Yellow Cake moving forward?
I think, we hope to have better equity markets, particularly in the commodity space. If the sort of uncertainty, disappears. Obviously, we've got Trump 2.0 and that's adding a lot of volatility. And when we have this volatility in the markets, then investors sort of pull back a little bit and makes it more difficult for us to raise equity. But hopefully, if things stabilize and we have a return to a sort of a risk-on trade, we'd like to raise more equity, buy more uranium, because we really believe in the fundamentals. We think the supply-demand mismatch going forward is very supportive of the uranium price.
Excellent. Well, thank you so much for spending some time with us today, and we hope you enjoyed the event.
Thank you very much.